Hello everyone and welcome to Investing Angles. Today we are diving into silver and evaluating its recent volatility from multiple technical angles. But before, a quick announcement. We are excited to share that due to a significant spike in demand for our analytics on the website, we'll be offering substantial first month discounts on our ultimate packages, exclusively for new subscribers to our channel, and it will be in limited batches. This is your chance to explore our products and see how they align with your investment goals. Stay tuned for the more details in our upcoming videos. Now, let's return to silver and unpack its recent movements. The candles. It was quite an ugly closure yesterday, and this is why. First of all, the daily frame. Silver was developing a very bearish combination starting with Tuesday. On Tuesday, it formed an inside candle, and we thought that it's going to be the beginning of the next move, but it somehow it was able to levitate at this level on Thursday, but on Friday, unfortunately, it fell and it formed a big tower top, which we consider one of the most powerful candle formations, multiple candle formations. And Friday's candle is just a confirmation, and the move lower is expected. So the same thing happened on the 3-day frame. We see a huge bearish engulfing here, and the 3-day frame is not finished yet, but we are seeing a cross of 8 by 20 EMA lines here, and this is the beginning of a bearish trend. On the weekly frame, we discussed earlier in November about this big formation, 3 black crowns, and they were almost identical. So there were 2 attempts to reverse it, and both of them failed. The green candle was followed by a hammer. Another green candle was followed by even a bigger hammer. And right now, the odds on the weekly are bearish, and we are seeing that silver wasn't able to surpass the big resistance levels. And everything started in November, when silver made a big bearish engulfing on the monthly frame. So the chances for a red December are fairly high. That's the candles perspective. Let's move on to the charts. First, before we move to charts, I'd like to evaluate the momentum here. So what we are seeing is that we have a MACD bearish cross on the weekly frame, and what happened on Friday? We consider this is a big one. On the 10-day frame, MACD formed a cross. This is a bearish cross, and it's a significant escalation of the weekly one, almost doubling. Well, that's now how important this cross, how influential it is. Let's have a look. Let's have a bigger look. And this we might need to go back to 2001, for example, and see. So far, we are seeing that there were 3 crosses like this on the 10-day frame, and this one ranks as the third one, third the most significant one. We had one in June 2011. We had a big one in February 2021, and now we have another one in December 2024. So as you can see, the implications of these crosses were quite high. So for example, in 2011, silver lost 72% after this technical event. In in 2021, silver lost 40%, and right now we don't know, but we expect this to be a significant number. Probably two-digit percentage losses would be somewhat normal to expect. And if we zoom out just a little bit, and if we look at the monthly frame, for example, it will give us some technical clues about what to expect. So if you notice here, after the declines here, silver found support at 200 monthly moving average, which is the red line here. So perhaps it would be reasonable to expect something similar like this happening next. And in our case, this would be a drop of about 40%. So this is the red line, and the purple line is 100 days moving, 100 months moving average. This is the monthly chart. So we would expect silver to drop about 40%, and this would be what kind of price? About 21. About 21. All right. So right now it's 35. Drop to 21. Well, that's a reasonable expectation based on what we are seeing right now. All right, so that's a quick excursus into what MACD is telling us, and now let's have a look at the waves. So this is the wave that we've been tracking since the end of October, and this was our initial chart on October 23rd, that we said that there is possibly a diagonal finished, and now we are expecting silver to go down, and this is exactly what is happening. So we had a very nice impulsive wave down, which breaks beautifully into 1, 2, 3, 4, 5, and each of the sub waves breaks into 5 waves as well. So after that, we expect silver to do something like this, and we were expecting a zigzag, and this most likely something like this is happening. And what we said, this would be a target, and as you can see, silver hit it nicely. It retraced about 0.618 of the wave 1 or A, and now it is dropping hard. And what we said, that the final wave of this ABC formation was a diagonal and the ending diagonal. And it's not only the ending diagonal, it was a double ending diagonal, which is kind of exacerbated the issue and increased the ferocity of the wave. And this ferocity caught almost everyone by surprise, but not the investing angle folks who were expecting it. And this chart we posted a couple of days ago to our subscribers, saying, okay guys, get prepared, and this is what exactly what happened. And we are seeing a very strong agile wave down, and most likely this wave is not even complete because we are not seeing a bottom yet. And assuming this type of this size, the wave of this magnitude exists here, and we are expecting wave 2, and then wave 3 would be even more ferocious and more and stronger. So what kind of we are asking the question, what kind of structure would absorb this type of wave, and what would be reasonable to expect? And then we had to zoom out and look at the bigger frame, and this is what we found. So we charted this path starting from 1991. So it was the first wave was fairly clean impulse with a very strong wave 5, which is normal and absolutely expected for commodities. And the big problem here is that with the wave down, the wave that started in July, in April 11th, April 2011, and ended in March 2020, is impulsive. That's the problem, and I'm talking about this wave, this particular wave. So this wave breaks very nicely into an impulse, and wave 3 of this impulse also breaks into impulse 1, 2, 3, 4, 5, and so basically the main assumption, main hypothesis here, that this wave down was impulsive, and we know from Elliott wave theory that the impulse down means that the correction is not over. The correction will continue and most likely will end with another impulse or a diagonal down. So that's what we are seeing. And if we look at this wave, so this is a possibility. This is a possibility again. And if we measure the size of potential wave B, it ended precisely at, it retraced precisely the 0.618 of the wave down that started in 2011. So we have a possible zigzag here, and and I'm talking about this way, so, and this is what it retraced, and in general, and we are seeing that this wave is shorter than this one, and it means that the correction goes in reverse order of complexity. So this is the most complex wave, this is less complex, and another one will be even shorter, even more agile. And now it's time to check what was this 21. Remember our estimate from this one, from MACD. So we had 21 as a big support line. So, and now we are questioning whether it stops here or not, because right now wave 1 is not finished yet. And once wave, we know the impulse, the size of the impulse, we will be able to estimate the entire impulse, the entire possible impulse for wave C, and this would be another wave 2. The question is, so far it is very strong, very impulsive, so perhaps it's reasonable to expect that the wave 3 would be impulse as well. From Elliott wave perspective, for this big correction that started in April 2011, for it to finish it nicely, it needs to make a lower low, and lower low would be below 1163. Well, that's quite a tall order, and I would say that many would be very disappointed with this analysis, but it is what it is. So we are saying that 70% in order to complete perfect a perfect corrective wave would be somewhat unheard of, but it is reasonable at this point. And if we are returning back to the MACD crosses, remember that the first one in 2011, that this particular one was almost exactly like 70% drop. So for another one of 70%, well, that's a possibility. I cannot say that right now it's very probable, but this is something we have to keep in mind. And I think that the main level to watch will be 26, 12 to 92. So if the wave down crosses this level, it will break the potential impulse upward, and it will make the whole wave corrective. And of course, at this point, the chances for a bigger decline will improve drastically. And well, what we are thinking about it. And if you want to know more about this one, and also we offer other forecasts like for dollar or for gold and for palladium and other instruments. This is our website, and this is where you can find all information. You can see the TOT recent our recent weekly analysis was posted 9 hours ago. If you want to know about the commodities, you go into the commodities folder, click on gold, and the site will bring you all information about gold and related instruments like videos, weekly analysis, and so on and so forth. And if you want to know about currencies, so the US dollar index, weekly analysis, daily updates, and so on. Well, if you're looking for trading signals, we right now we have our beautiful service, live trade service, hosted by David Lee, our seasoned trader, and he is providing signals for SPY and SH, and he is trading only on SP 500. And for almost 2 years of our service, we have made 53%, and this doesn't include the recent transactions, which are hidden for now, but they will be available later. So if you want to know all information about this, you can click here, and there are lots of details, lots of information about what we do, how we do, and what is our take on this. And our video library is here, so you can see everything is what we are posting recently about the metals and other instruments. Okay, so you've been watching the what's next about silver, and our next chapter here is SLV. So a few weeks ago we said that there is a chance that SLV is forming a big head and shoulders, and this is right now, after Friday's closure, it is sitting right on the neck. The chances of breaking it are fairly high, and especially if we look at this weekly candle, the huge bearish engulfing of the tiny green one, the chances for a red week next week are fairly high. The question we have right now is whether this first wave to the neck was the entire wave, or this recent bounce was wave 4 of wave 5, and wave 5 is next. So if it breaks, we are expecting it to hit 23 at least, as a legitimate target for the head and shoulders. But also, if this is wave 5 here coming next, we would expect something like this, and then a bigger move down. Well, that's the possibility right now, and the probability for the red move next week is very high. Yeah, that's all I wanted to say about silver. I think you have a good picture, and you understand what kind of concerns we have from various angles, like candlestick, some technical indicators. Uh, this is I'd like to emphasize, this is some technical indicators, but not all technical indicators that we are looking for, and which should help us to make decisions. All right, so that's all. That wraps it up. Thank you very much for watching, and look for our discount codes in the next videos. Have a great weekend, and happy trading, everyone.